Welcome, everybody, to our coffee chat of the month. I'm Fernanda Landigrafi. I'm your host for these sessions. And today we also have Lindsay Lear with us. She's our practice leader. Thank you so much for joining, Lynn. Today we are going to talk about stablecoins, AI, and the future of global commerce. But as usual, before we dig into the content, let's go through a few guidelines. So first thing is that this is not a typical webinar, so we truly encourage your participation. So feel free to open your camera, open your mic, make questions or comments, or also use the chat. So we truly encourage your participation. The more you put in the sessions, the more you take out of it. But also keep in mind that we do publish this material in our YouTube channel, okay? So now, to introduce our guest speaker of the day, we have Ignacio Carballo here with us today. Ignacio is the Director of Alternative Finance here at PCMI. He has led many projects and also written many pieces about blockchain-based solutions, cryptos, CBDCs, among other things. Ignacio is also a professor and a researcher in several universities in Latin America and Spain. And most recently, Ignacio became the new curator of our new newsletter, Out Finance Focus, which he will give a bit more details for us in a while. So Ignacio, thank you very much for being with us today. And let's get started.
Thank you, Fer, and thank you, everyone. Hello, thank you for joining us. Again, if you want to learn more about global money movement, new rails, I really invite you to subscribe to Alt Finance Focus. You can see the QR code here and find the newsletter link in our webpage. Today, we go to the next slide, please. Today, I want to talk about something very important that you know is a very trending topic nowadays, and it's how the rails of money are changing, and how new technologies and specifically stablecoins and agentic AI are not just new tools, but they are this new infrastructure of the global commerce. So I will divide my presentation in two parts. Again, this is a coffee chat, so please feel free to interrupt me at any point, but if don't, we will leave some space for Q&A at the end of these presentations. So in the beginning, the first part, what we will do is to look how the stablecoins are reshaping the speed, the security, and the scale of global payments. And for doing so, I will speak a little bit about regulation, numbers, or the size of the opportunity, and of course, how are the institutions right now using stablecoins in their businesses. And the second part of my presentation will be a little bit more a look into the future or the near future. And we try to connect the stablecoin with agentic AI that, again, as you all know, the most renewable firms in the finance aspect, all of them have pretty much launched some initiative about agentic AI. All right, so let's begin. Next slide, Lauti, please. And to understand the change, we should begin with something very simple, very basic, but we must begin with the rails, all right? With the system that move money. And I will focus this presentation in global money movement. We can discuss domestic payments as well, but again, stablecoins and blockchain-based solutions are much more relevant right now in cross-border money movement than in domestic for several reasons, but mostly because in the domestic space, we already have solutions and infrastructure that are providing pretty good UX and pretty good services for the consumers. So for years, as you know, we have used traditional rails, SWIFT and ACH mostly. These are reliable, but they are slow, they are expensive, and they are closed mostly. A single cross-border payment, as you know, it must take up to 6 days and cost somewhere between 3 or 6%. For some specific use cases, that can be much more. If you haven't read it, I really and strongly recommend you to download our last white paper with MasterCard about SMEs cross-border payments. and you will see how, for instance, in Latin America, the traditional rails of correspondent banking can delay more than 10 days in 2 out of 10 international cross-border payment in the SMEs. And in the 40% of our database, of our trials, we found that it took more than 4 days. And the cost in our region in Latin America can be as high as 33%. But nowadays, these traditional rails, SWIFT, they represent the 70% of the global flow. So then we know we have alternatives. The card networks like Visa, MasterCard, UnionPay, yes, they are global, but often they came with rigid fee structures and they don't adapt well to all use cases. Also, they are not necessarily the cheapest rail in all the corridors, right? In all the corridors. Closed loop systems as PayPal, Alipay, Revolut, they have a great UX. They provide faster transfers, but they only work if both sender and receiver, they use the same platform. There are a lot of intentions of interoperability. Just last week or the week before, we hear the announcement of PayPal World trying to connect, different platforms. Same week that they announced also the new initiative on stablecoins. But again, they still lack of some, modern infrastructure for what we will be discussing is the future. Then we have, of course, this next generation of rails, the RTPs, these real-time systems like UPI or PIX that you know very well. They work great within countries, and some of them are starting to link up across borders, but these interlinks are still a few and far between. The same with CBDCs. CBDCs, they are gaining a lot of traction with pilots like Drex in Brazil or Nigeria or the Ishuan. They offer programmability, which is something I will speak when I connect everything with AI, but they are mostly domestic right now, and the cross-border projects are just a couple. Enbridge, Project Tumbar. I mean, we envision a lack of scalability with CBDCs in the midterm. They will for sure play a very important role in the future, but in the short or midterm, there is still a lack of scalability. And then, of course, finally, we have these blockchain-based solutions, and in a specific stablecoin that we will speak during this presentation. They are not only cheaper, not only faster, but they are also more flexible, more global, and more intelligent in terms of programmability and how they can fit in new tools like agentic commerce and agentic AI. So just to give you an idea, in 2024, pretty much the stablecoins processed more than Visa and MasterCard combined, right? So, and again, what makes stablecoins powerful is not just the speed or the cost, because we have alternative solutions, but mostly in the context of agentic AI, it's programmability. And that's why all the players that you can see in the right of this slide, all of them, as you know, they all have an initiative with stablecoins. They are also offering an stablecoin or working in a pilot. So now that we have seen, again, this was like a brief introduction why this is kind of a superior infrastructure for payments. And I say kind because, again, we are speaking about the technology. I know that for some cases, the traditional rails are still useful. But now that we have seen that they are a superior infrastructure for payments, we can talk about the signs that tell us why the moment now is not, what right now this is not just a niche trend, but a maturing institutional market, right? So if we go to the next slide, we can start first with the numbers. The total market capitalization of stablecoins has surpassed the $250 billion in 2025. And the growth is absolutely crazy. I mean, I just updated the data yesterday, and the last year 46%. If we go to July, it was a year-to-year growth of more than 50%, and the CAGR, the compound annual growth rate, from 2020 to 2024, it was more than 75%. And of of course, behind of this, new players are entering into this scenario. But more importantly, so are the regulators. So for years, this was kind of Wild West, all right? I remember doing projects for our clients, and about stablecoins just 2-3 years ago. And when you speak with the crypto natives, yes, everything was amazing. When you speak with the incumbent, they were very interested. But when you spoke with the firms, everyone said, all right, but until we get clarity, I won't do anything here. Not only the firms, but also the banks, the traditional banks. But this lack of clear rules got changing fast. So right now, long story short, I know that you have here what have happened with the crypto week 3 or 4 weeks ago in the state. That was like the end or the beginning of a very long process. But in general terms, we already have in Europe the MiCA framework, which is already into effect. In Asia, we have Hong Kong, the UAE, and Japan. All of them have created a very strong regulation with licensing regimes for stablecoins. And this year, the United States has passed the Genius Act. It will be active probably in 2027, but yeah, 227, that like the last date possible. But this is one of the most important pieces of legislation for this space, because it sets clear national standards for reserve banking, redemption right, custody, separation. And so again, what does it mean? It means that this is not a Wild West anymore, and it is becoming a regulated space where banks, fintechs, and of course governments are getting involved, right? For financial institutions, this is key because it reduces the compliance risk. For fintechs, it creates clarity for cross-border, for instance, for cross-border use cases or wallet integrations. So we can speak about the regulation later, but there are 3 key components that all of these regulations have in common. There is still some fragmentation. That's one of the risks that we see also in this space, but at least we have three aspects, which are the full one-to-one backing of the stablecoin with fiat currency, the independent custody, and the redemption warranties. All of those are in this in this regulation. So this creates the perfect runway for something else, which are use cases at scale, global use cases, and that's where we are heading next. If we go to the next slide, please. I don't want to speak a lot about B2C here. Why? Because B2C has been around for a long time. Crypto cards, domestic payments, paying in your own country, in your e-commerce platforms. There is a huge opportunity there. We already know that. But again, the competitive landscape with all the other rails is probably much more difficult for stablecoins. But when we look into these global use cases, stablecoins are not only, again, faster, but they also are cost efficiency. And one of the most, probably one of the most overlooked cost in global finance, and I wanted to speak about this right now because there was a fantastic white paper published by BlueRock that involved all the main stakeholders from Circle to business, and they quantify the opportunities for B2B payments in the global space, but not like the TAM, the sum, and so on. Just looking into the liquidity trap inside of this business. So again, 75% of the global money flows goes through correspondent banking. And as you know, that system works with nostro vostro account that make the firms to lock money in different markets. Well, so the estimated value of all that money are around of $27 trillion. So that capital that's not being used is not being invested, is not being lent or earning any kind of shares. Just think this math. If you park 1 billion at a time, when short-term interest can be, I don't know, 5%, that means 50 million a year lost in opportunity cost. So this is something which is very, this is a direct efficiency, earning or win for the ecosystem. And this is something which is being like the low-hanging fruit of the stablecoin for the firms. All right. So of course, with stablecoins, it's not that you don't need the pre-fund in local currency. You can also settle cross-border in USDC or USDT and convert everything in minutes. So they are not just efficient in terms of infrastructure, but they are also capital efficient. And this is why the CFOs and the treasurers, they are all starting to see stablecoins as working capital tools. All right. So new use cases comes with this tool in this spectrum as well. And if we think how can the institutions make money besides of the opportunity cost, how can the financial institutions make money nowadays? I would like to present you next slide, please.
Nacho, can I pause you for a question?
Yes, absolutely.
So if we go back to the slide, and this is really for anyone who wants to answer, this is very compelling, right? You have $27 trillion locked up, huge, that's not earning interest, that's just sitting there dormant, big opportunity cost, which you would, should be a big motivator for financial institutions. However, we don't necessarily see them really aggressively moving in this direction. So there's a friction. What we think is a great incentive isn't necessarily acting as this incentive for many reasons, I'm sure. But I'm curious, what are those reasons? What will motivate banks to start moving?
Well, we did. I know that you know because we work on it. We were one of the first firms in Latin America speaking officially about this in a beautiful project that we did for Bitso last year. It is a public white paper, and you can download it. The answer for that question, Lynn, in my opinion, is yet. They are not moving yet.
Yeah. Yeah, right.
Why? Well, mostly because of the regulatory uncertainty that the firms find in this space. So we published this white paper last December, and what happened since last December until today, August, again, I have found at least 3 other publications speaking about this topic, and this is like a panel in all the global forums. So this is a slow process. Like the companies are, but I can think in firms like Sony, which is working in this line. There are global firms that are working in this spectrum, and so yes, the regulatory fragmentation is probably the main reason. Then of course you will have other specific reasons that can be delaying this, but again, with this bunch of money dormant there, it's just a matter of time. And that's why we are bringing this topic into the table. Again, it's not because there are not good news in the B2C or the B2B2C space. There are a lot of efficiency there as well. But it's because this is a topic in which it's not only, as we will see in the next slide, how you can make money, like grow your business. This is how you can, increase the money that you are losing because of the inefficiency behind the traditional system, right?
And this is Marcia. Well, I know since Lindsay posed the question, I think this is a great topic and very timely. And because I've been talking a lot to, financial institutions and other leaders, in the fintech space around stablecoin. And like before, it was kind of like something that the innovation teams were playing with. But now that the Genius Act has kind of passed, it's becoming more of a mainstream conversation. And what I'm finding, it's monopolizing conversations. Like whereas before, like instant payments is sort of passe, AI, everybody's got AI fatigue. And so now stablecoins, the next
This is the
hot
new
topic.
thing.
But the thing is, yeah, so some of the hurdles though, I mean, besides the regulatory aspect, is that, you know, there's not all stable coins are created equal. And there's kind of like three tiers of stable coins. There's the ones that are fully backed by you know, the US dollar or, you know, legitimate assets. And then you have the ones that are sort of backed by crypto. And, you know, so banks are very risk averse and very conservative. And so, you know, having use cases where, you know, because the whole KYC, AML, like, you know, the Tether, right, is known for being behind a lot of that pig butchering stuff. And banks don't want to be associated with bad actors. And so that last mile, the KYC, the AML is like so critical. So a lot of the use cases that you see, and I'm sure Ignacio is going to talk about this, a lot of the use cases you see is where financial institutions have control and visibility into the last mile delivery. Like, so a lot of like closed loop networks, bank to bank kind of transfers where you know who the recipient is, because it's so important for banks to know that last mile. So just like the other, you know, kind of the interoperability is a challenge, that last mile delivery, the quality of assets. And then there's the whole question, I don't know, Ignacio, if you're going to touch on this, but the financial stability, you know, the stability of the financial ecosystem, because if we start shifting transactions over to stable coins, like what does that mean for banking as we know it? Like how do what happens when you anyway, so those are okay, so those are just replying to your question, Lindsay. That's my
No,
perspective.
that's perfect, Marcia. And I think you touched on so many great things.
Yes,
And it,
yes,
you know,
that's
a big underlying thing is like, okay, priorities, like, you know, there's so much for us to do. And at the same time, all of these innovations disintermediate us to a degree. So, you know, I can imagine it's a very complex question for financial institutions.
yeah, no, that's a fantastic intervention, Marcia. Thank you so much. Just to summarize a quick thought in my mind, there is like a race right now in order to see which will be like that stable coin that will for sure it will probably be, this is my opinion, and the what we listen in the forum, it will be USDC or some kind of consortium around them. But as you probably have here, you know, the main banks in the United States, they are also working in their own stable coin. And then we will have this also like this like public consortium initiatives like the BRICS trying to create their own CBDCs, which is not an stablecoin, but is also competing around. So in terms of why it is not going that fast, but it became a mainstream topic right now, as you say, yes, it became mainstream topic because of the regulation. So that unlock a lot of things. But there are different situations in which it is still or too risky, or the benefits are not that big. And something that we listened before, you know, is that all right, this is a massive earning for us. You know, I'm in global company, I can earn a lot of money in this sense. But because I am that global company, when I go to my providers, I get better effects, I get in like instant transfers. So all the other benefits, I have them solved with the traditional trials at some point because I move a lot of money. So those all other benefits were not that interesting in comparative terms. As we will see in the second part of this presentation, that will be more a future discussion. In an agentic AI world, that cannot be the situation anymore. You cannot say, okay, well, I will make it. I will have, you know, preference because I move a lot of money. So my partners, they give me immediately. They give me a cheap cheap effects or whatever, right? But yes, there are a lot of situations. Yes, Marcia.
Well, I was going to say there's one more thing that maybe it may or may not be represented here, but with and with the tariffs that are being imposed on other regions. So if we look at it from a global landscape, like I know you're going to talk about the use cases, like there's a lot of kind of like influencers being paid and B2B payments, but one of the things I've also observed is that those countries that are dependent on the US dollar for their commerce, like for example, the Caribbean. I've been working a bit in the Caribbean. They want to reduce that dependency, ideally, or find ways to reduce that dependency. And I think like with BRICS, right, if they start using stablecoins backed by US dollar, but I mean, I guess one of the things that I've seen is that their idea is that at some point in the future, they can swap out the US dollar for some other currency potentially. So it gives them that power and that flexibility. I don't know if that's something you're going to talk to or if you've seen, but
I'm not. I really follow that topic because I like politics a lot. I like politics, so that's very much a political discussion. In fact, one of the intentions why or hypothesis of why the only of the three different regulations that were discussed on the United States Congress 2.5 weeks ago has fully passed, which is the Genius Act, is because of this global war against dollar. Because if the world adopt stablecoins based in American dollar, that's more demand of American dollar in the world. All right, so that's another fascinating discussion that has a lot of implications for the monetary policies of the Federal Reserves around the world. And there's a discussion there, but again, it's very early in my opinion. I mean, yes, probably some governments will. I can think in the BRICS right now, to be honest. Like the BRICS are fighting that fight that they can maybe be against of private stablecoins because they are private, but they are giving monetary power to the United States dollar at some point. So yes, there is an incentive there. But even if we think about again the agnostic and objective benefits, we're speaking about a massive amount of money that is dormant there that can be made in jail. We are speaking about money that can be programmable. And I will speak about the cost of this. That's one of the risks that I bring here. It is costly to build your own stablecoin. So that's why partnerships is pretty much the only solution today if you want to make this mainstream. So it's not everything wonderful, but again, something has changed. And the numbers shows that because the demand of stablecoin just don't stop growing and it is accelerating a lot. So we jump to the next slide. Thank you, Marcia. Lautif, we can move to the next slide. We have published this, no, the one before, sorry. We have published this wonderful white paper. I'm sure that a lot of you want to understand better. So what can I do here? So at PCMI, we recently published a global report titled How Banks and Financial Institutions Can Monetize Stablecoins. And it's based not only in our own research, but also on interviews with crypto infrastructure providers across multiple regions. And it outlines clear revenues model that are already working in the market. They are not mainstream, but these are the way that financial institutions can make money. So it's not only the opportunity cost, it's not only providing a better service to your client, but it's okay, how you can make money. I won't go in deep through all of this. We can discuss them if you want, but just to have at the top of your mind, transaction fees and FX spreads. Of course, you can make money providing custody or wallets. If you are a company like Visa or Stripe, you can embed your APIs into other financial institutions. That's how Stripe, for instance, get money every time anyone pay with a stablecoin. Of course, you can issue your own stablecoin, as you were saying, Marcia. That's very expensive. Some numbers speaks about more than $50 million for start speaking very you know, for saying at some point a very pilot stablecoin. Treasury platforms, banks can offer white label platforms and earn money from software as a service, and compliance as a service can be another way, or regulatory. In our white paper, we show how all of these revenues, they are like easier or harder, and we also recommend a path for those that want to start in this ecosystem. And again, the spoiler here is that we recommend starting with partnerships before doing it by yourself, of course, because there are a lot of risk. So we can discuss this if you want later, but I want to jump into the second part of this presentation. So so far we have seen that the stablecoins already outperform traditional rails in terms of cost, speed, accessibility, and of course the technology behind. That they are not only fueling B2C use cases, but there is a massive efficiency opportunity in B2B flows, and especially in terms of this liquidity trap. But the story doesn't end with infrastructure improvement. So we'll talk now a little bit about the future of commerce. And again, this is our own analysis, but also what the industry is speaking about, because as you know, and if we go louder to the next slide, please.
Nacho, just have one, sorry to interrupt you, we just have one question in the chat. It's regarding the previous slide. So the question is Juan Carlos. He is asking like how new entrants or fintechs can also make money, and that if it differs between banks and fintechs.
Oh yes, it is. No. It is treated in this white paper. We speak about banks because banks are by far the most traditional and slow institution in the ecosystem. But all of this revenue, just remove custody, can be implemented by fintech. So in the white paper you will see banks and financial institutions, and yeah, these are the 6 main. There are other ones like repos and other ones more technical. In fact, this month, I think next week, Lindsay, or the following one, when we launch our newsletter, not Alt Finance Focus, the PCMI newsletter, we'll publish an interview going deeper into this way of making money with 3 different stakeholders. So the answer is yes. You can read the white paper and you will see just remove custody, because they do, in the case that they do not have a banking license, but all the other revenue streams are also applicable for fintechs. All right. So let's jump into agentic AI. All right. So before entering here, just want to highlight how stablecoins will be even more essential in the coming years, because in an agentic world, we will need to look at a unique feature of stablecoins, which is programmability. All right, and we'll see how this is directly connected to the rise of agentic AI, where stablecoins become kind of the default tool, right? So if we go to the next slide, what do we mean with programmability? All right, so it means that we can now embed rules into payment itself. For example, just imagine paying a supplier only once the good arrived, or splitting the payment and the tax and the compliance, everything automatic with a smart contract. So it means that instead of sending a payment and then manually doing any kind of accounting or compliance or effects, you can build all of that logic into the transaction itself, and everything on chain with full transparency and with no reconciliation delays. So this is kind of the automation layer that CFOs and treasurers should probably have been dreaming about for a long time. I'm thinking companies as Sonia that I mentioned before, or Kraken that use smart contracts to manage collateral, or Mansa that automate settlements and FX across borders. So when we speak about the programmability behind the money, and again, just CBDCs or stablecoins have this kind of feature or supercharged feature, we are speaking about the financial logic embedded in the flow of the payment. And this brings us to this topic that is the one that I want to speak about, which is the autonomous agent. All right. So if we go to the next slide, first, if I'm going a little bit fast, but I want to leave some time for Q&A. Again, you can interrupt me whenever you want. I'm sure that all of you have heard a lot about agentic AI in the last months, mostly because MasterCard and Visa, both of them launched the last April their initiative, but we can also mention firms like Nubank, Alipay, PayPal, JP Morgan, all of them are working in this initiative. So for those one that haven't heard about agentic AI or what it is, I recommend two things. The first one is, I know that all of you are using ChatGPT, so just go to ChatGPT, put agentic, and Google something like, I don't know, find me the cheapest flight or the cheapest phone today, right now, at this right moment, and see how it works. I recorded a video and I wanted to show it here. I took like, it is still a little bit slow when you do those questions. It can take like 5 minutes, but it's pretty much doing everything by itself and show you the best prices live online. All right. So that is a game changer. And the second thing that I will recommend you to do is, of course, to go through the initiative of MasterCard and Visa, which are very clear in terms of how it will or it can change the commerce. But the long story short here, think them as a complex, think an agentic AI, not only in terms of e-commerce, which is the example that I have given to you, but think it in any space, like a compliance officer or a full payments operation teams. But here's the catch: these agents, they cannot operate on legacy rails. I mean, they cannot wait 3 days for the bank transfer, or they can't call a human to approve a wire. So they need programmable real-time and global money in behind. That's why when Stripe announced their agentic solution, was the same day that they announced their stablecoin initiative. That's why all of these companies are working together, agentic and stablecoin, all right? In every single case, they rely in this idea that AI is the brain, but the stablecoins will be like the bloodstream behind this. The bloodstream behind this. If you go to Visa and MasterCard, of course, the cards will be behind, but they also have the initiative with stablecoins. And if we want or if we try to maximize all the potential here, it cannot be with the traditional rails. How does it work? The AI makes a financial decision, the stablecoin executes it instantly, and then the AI learns from the outcome. And this unlocks new use cases like agent-driven FX optimization, automated B2B payment and invoicing, freelancers getting paid globally by agents, real-time treasury bot, sweeping or allocating liquidity, right? So when we talk about stablecoins, we're not just talking about payments, we're talking about enabling the next generation of financial actors, all right? If you want to speak a little bit more about this, I will be absolutely fascinated, but let me go to some of the risks that we see here. This is very much related with Marcia's comment. If we go to the next slide. again, we're speaking about stablecoins and agentic AI, and I mean, when will this become mainstream for all of us, all right? Well, we see three kind of yellow lights or things that still need to be fully solved. One, and the first one is still the regulation, because you will say, but Nacho, you started your presentation say that regulatory certainty. Yes, of course, but two things. First of all, it still needs time, right? The Genius Act, it is estimated to be fully implemented in January 2027. But even when I've said that Asia, Europe, and the United States, they are, bringing some clarity in this sense, there is still some fragmentation. Not all of this regulation and the others have the same kind of licensing schemes. Of course, they are not connected yet. So this fragmentation can slow the process of stablecoin adoption, and as a consequence of real agentic AI commerce in an automatic way. All right, it can slow down this. The second one, it is expensive. So launching a regional stablecoin, it can require more than $50 million or 250. Those are some of the numbers that are being mentioned around. That's why here we recommend partnerships. In the white paper, you will see a lot about which are the different strategies that you can take in terms of partnerships to minimize this kind of risk. And the third one, and this is very interesting. Again, go to ChatGPT and do this exercise if you haven't done it yet. But some things that you should think is, okay, this will change the whole economics behind the e-commerce as we know now, at least in marketplaces overall. Why? Well, because the brands might probably lose influence. Think in an algorithm comparing objective features of a product according a prompt. It will probably don't care if it is Apple or if it is any other brand, So that's kind of we wouldn't say, yeah, it is a risk, it is a yellow light that will change the way that the things work. In second term, the ads might become irrelevant. So all the economics behind the marketplace commerce in which the merchants are paying to show up their product and the promotion, whatever, that will change, because at the end of the day, again, the AI will be looking all around the way, best price and contrast features. So that will also change the economics and the way that we in the financial sector or the payments providers works with merchants and with marketplace should be, thinking this spectrum. And last but not least, of course, there will be probably new fraud risk that might emerge, because again, the AI is fantastic. It supercharges us as employees, as entrepreneurs, but it also does with the criminals. So the frauds, the scams, they will also change, and that's another very huge yellow light that can probably kind of slow this process here, right? So next slide. Here are 5 key insights of this whole presentation, and we'll open the floor to discuss. But interoperability is coming, is here, and that will be the topic. Again, I strongly recommend all of you to review the announcement of PayPal World, and it's very interesting how the film, for instance, in Latin America, how they decided again to supercharge Mercado Libre instead of competing with them. So how they prioritize interoperability above market is a sign of how without interoperability, we cannot make other business that will be probably more important than competing in some markets, right? Second, programmability means automation. We have automation in other rails. We can get automation with cars. We can get automation with closed loop systems. But if you want to take the 100% potential of these new tools, it should be through programmable infrastructure. And over there, blockchain-based solutions are the tool. Agentic AI is here, and it will empower not only the way that we do businesses, but it will also empower our customers. So we need to rethink the way that we sell and that we approach our customers in that sense. I've mentioned a couple of risks and how the e-commerce will change in the future, but probably there are more questions than answers in that space. And that's why I divided my presentation in what is happening now, what we know now, and this kind of future, trend of agentic AI and stablecoins. Stablecoins, they will go mainstream. We have seen that. And again, there is still debate, whatever, but when we see the numbers, when we see the growth of the market size, they are going mainstream. So the recommendation here is don't wait, act now. And finally, partnerships are key. No one builds the future alone. Partnerships are key. So think the strategy of doing those partnerships would be the first step that anyone that want to start to build in this industry should be making. So those who move early, of course, they will lead, and those who wait, they will probably lose their head. Juan, I can see your hand rise.
Yes, I have been anxious for you to wait here. Two questions instead of one. First is, what is your vision of how fast is this movement of B2B companies moving from the fiat neighborhood to the new crypto stablecoins neighborhood? Let's say, put it in that context,
yes.
As much as possible. And the second one will be related to the level of programmability, because you foresee more like programmability like embedded in the transactions, or you're mainly for reconciliation or accounting, or you're also seeing programmability interacting with separate environments or separate flows. When you think about trade, for example, where you're pending to do certain things, pending of documentation that needs to happen in logistics, things like that, that is like a more interdependable programmability. Those are the two areas that I wanted to connect.
Thank you, Juan. Thank you. That's a fantastic question. And as your question shows, this is like opening a Pandora box. When you open it, you can think it lasts like endless use cases, opportunities, ways. So this is our opinion, which is based pretty much in our business, and our business is, as you know, because we interview you guys a lot of times, is doing quantitative and qualitative research to help companies grow, protect, and measure their business. So speaking with the firms, first question: how fast is this going? I don't know which will be the variable, but if we think like between 1 and 10, I will say that until December, it was going probably 3 out of 10 in terms of speed. And this year is like not max speed, but it's going like 6 or 7 out of 10. Like everyone is asking about this. Everyone, all the spaces, all the companies. That's why it's quite strange yet to make an analysis in terms of when will it become mainstream. Because as we were saying before, we are seeing like the big banks in the big global bank in the United States saying that they will create their own stablecoins. On the other side, we can see Visa working with USDC and trying to use USDC like the mainstream stablecoin. We see the crypto native firms creating their own consortium and trying to promote that. So there is like this competition of which will be the stablecoin, but for sure, what I can tell you is that it has accelerated a lot this year, mostly because of the regulatory certainty. Which is the speed, when will this happen, and at which magnitude? Those are more difficult questions. Probably what we will see is like a coexistency of these initiatives. In fact, that's what is happening right now. I started this presentation speaking about the rails, but all the companies are offering all the rails, right? So the question will be, at which rail increment your ROI, right?
Okay.
And
Thank you.
next slide, we'll close with a little bit of that. So that's the first question. The speed, I don't know how fast is it going. What I can tell you that it is going at least twice faster than last year in the last 8 months. And when I speak about programmability, we speak in theoretical terms in all the use cases that you have mentioned. But right now, the discussions are very much related with reconciliation settlement and liquidity management in terms of the backend. That very much it. Why? Well, because as I said before, if you think in splitting a payment or automatic paying a fee or whatever, those are things that in a more costly way, they are solved with the traditional tools. So the lights are put right now in the back end, which is fascinating because, again, it's something that we always say that the B2B efficiency are like, it is like the roof of the B2C efficiency. So if you make the B2B more efficient, at the end of the day, you can create more efficient B2C products. So it will rise the level of that.
Okay.
Yeah, I hope that has helped. Marcia.
Thank you.
Yeah, I couldn't figure out how to raise my hand. I was like, where is that button? So I was
Listen,
raising my
did
hand
well.
here, but I have some comments and then I have a question too. So I think like when we look at the rise of numbers, like my understanding is like the bulk of the transaction volume we see right now is a lot of like people buying crypto. So it isn't necessarily like commerce volume. So it's a little bit deceptive as to what those numbers represent. But then my personal belief is that that stablecoin is actually going to kind of help drive instant payment adoption because, like, you know, people got a little bit of fatigue, but now as they start visiting their strategies, their multi-rail strategies to figure out how do we optimally route stuff, they're going to go back and look at stuff that they already have, which instant payments is already well defined. It's accessible. There is some risk, but the risk is known, quantifiable, and mitigatable. And so I see stablecoins as actually driving up instant payments adoption. And then, you know, I think the agentic AI stuff is interesting. There's already a lot of dehumanization happening. And I think maybe there's going to get to be fatigue because people want to be a part of the equation. But anyway, so my question is more around the programmability piece, right? Because like if my theory about driving towards like if instant payments is going to start getting traction, you know, we're getting to this ISO, there was this whole ISO 20022 migration, which is a standardization of payment messages. And so now that payments are getting standardized to this messaging, like, do we really need stable coins for that programmability? Or can we now you start programming against this ISO 20022 message? So my bet, like, yes, there's a lot of attention around stablecoin right now as we figure this stuff out, but my bet is that it's going to drive up instant payments and then we'll figure out how to do it on rails that everybody's comfortable with, because the financial institutions are so conservative and there's this whole concern about market destabilization. Like, you know, people want their control. Anyway, so that was a comment and a question.
Oh, that's fantastic, and we'll go to you, Nick, in a minute. Just let me say two things. Yes, when we see the volume of stablecoins, there is a huge amount of that money, which are traders that are just doing their business over there, or it can be people. Another use case is of course a market that have no access to dollar and some savings and whatever. But I didn't start this presentation speaking about the market volume, which is that huge amount. Right now, is $280 billion. But I spoke about the transaction volume, and I recommend you guys to go. I will put it here in the chat to go to the Visa on-chain analytics, in which they, I don't know if that has been sent, in which they measure which part of that amount is being used for transactions. And right now, I open it right now when I was listening to you, it is $39 trillion the last 12 months. Last year was 24, more than Visa and MasterCard. So yes, that's only is 15% of the total market value. So which is a lot.
A question I have, or a really good observation, Marcia, that you made, and it's a great question to ask, is how this programmability, it sounds very, very cool, but how much is it really in demand? How much is it really wanted? How much is automation, and where is automation really desired? Because to your point, banks want control. They don't want payments being sent without triple checking every box. Do consumers want it? I don't know. We haven't really had a chance to experiment with it yet. So it's a very cool capability. The question I have is how much value will it really drive, and how much demand will it generate?
This is great. We'll go to the next slide, and I will answer this, and I will give you the word, Nick. But I want to leave this slide here, because these are some of the questions that you probably should be doing yourself. This is how we can help you to answer this question. This is what we do for a living here at PCMI. So one of those questions is, which are the size of this opportunity in terms of programmability and it value in comparative terms with ISO or other tools. Again, the idea for the programmability that we know nowadays, which is split payment, automate payment, and that's it, is probably will be the same. The only thing is that those initiatives are going very, very slow to implement. But if we think in agentic AI and the future of commerce, those initiatives will probably lack of strength to be embedded into this new way of e-commerce. Right, so that's the answer right now. I do not have the crystal ball to understand what will happen in the future. But what I can say, my opinion is like, even if that replace this Pandora box that was opened by Sergio, a bunch of the low hanging fruit use cases, the whole potentiality of this process will not be able with the legacy rails.
Nacho, I'm really glad you took this. I think is the most valuable slide of the deck, because this all is so hard to understand, and hard to understand what the implications will be. What should I do, right? There's so many transformational changes occurring, so many ways this could move. So, you guys will get these slides, but I even want to invite you to take a screenshot of this slide, because this helps you organize your thinking and helps prioritize which questions do I need to answer to start creating and deploying a strategy. So, I believe that, of course, we're not going to answer every question in this seminar, but this helps you begin to organize your thoughts around the topic.
Absolutely. We're running out of time, but I have Nick and Gary, and I can say so. I would really love to hear your comments if you have it.
Yeah, mine was a little bit more on what Marcia and Lindsay have already said, but going a little bit further. If you're creating a stable coin, then anybody else using your stablecoin is taking a risk. Are you a trusted source of the stablecoin? Like, what is the stablecoin providing on top of a CBDC once the CBDCs are all running smoothly? Because the CBDCs are guaranteed by the central bank. The stablecoin is guaranteed by you. Now, Visa has a trusted name. Everybody trusts Visa. That's going to work. And there are others as well. But the idea of going out and creating a stablecoin, you've really got to understand who trusts you enough to use your stablecoin. And then on top of that, this programmability part is going to be central to it. You've got to offer something more than the CBDC. Otherwise, why would you use it? So I think this is a fascinating conversation. But risk, we're in the payment industry. Risk is central to everything we talk about. Not only the risk to a bank, but the risk to a business, the risk to the consumer. And we have to take all of that into account. But excellent conversation.
Thank you, Nick. That's an excellent point. Just let me give you a quick opinion about CBDCs versus stablecoins. That's a fight, all right? What we can assume is that the CBDCs process will be slower than the private stablecoin. And the international, like the multi CBDCs project, they will be even slower. It's the same pain point that the interlinked RTPs have. They are amazing when you connect UPI with Pay Now, but we have more than 180 countries or markets around the world. So at the end of the day, again, SWIFT works well, works great in many corridors. But when you go to exotic corridors, when you should go through, so same problem there. That's one of the risks. And so the speed. And second one is that just let's see what happened with the CBDCs. Because in the crypto week in the States, 2 weeks and a half ago, 3 different regulations were discussed: the Genius Act, the Clarity Act, and the Anti-CBDC Surveillance State Act, which basically was saying something like the anti-CBDC. If the state were to create a CBDC, it should go through the Congress. So not all the market and not everyone is looking forward to have a CBDC. So that my opinion this far. That's why we believe that that's wonderful. We have written an amazing white paper about CBDCs last year. I did it, so I am a fan of that. But that's much midterm, long-term, trend. Gary, and last one, if you want. Yeah, we'll need another session. I don't know, Gary, if you want to make a comment, you have your raised hands, but I have read your comment right now. I think that we are done, guys. Thank you so much for your patience. I know I am a professor. I can be a little bit of slow and speak a lot, but thank you so much for all your questions. Again, I invite you to subscribe to Alt Finance Focus, our monthly newsletter in which we basically curate the content, all the content which is around those topics, and we make a making sense section saying these are the implications for the payments industry. So I'm really looking forward to keep on in this conversation. You have my email, you have my social network. So every time you need something, just please don't hesitate and write me back. Thank you so much, Fer, for inviting me here today.
No, thank you so much, Nacho. That was a really great session. Thank you a lot for being here with us today. And see you, everyone, in 1 month for our next coffee chat.
Right.